Hey, what's going on, team? It's Ricky with TechBit Solutions. So, another kind of red day for the overall market. A question that we've been getting a lot is a lot of people are just concerning themselves based off of current market direction. And trust me, especially if you're a little bit newer to trading, I 100% get where it is that you are coming from. One of the first things that I wanted to follow up with is I actually wanted to ask you, as the market, as we've seen, is pulling back right now, right? This is the TQQQ, which is the NASDAQ triple leverage ETF, meaning that this follows the overall NASDAQ market. NASDAQ market, which has a big focus on tech, as of right now is recently pulling on back, right? So today wasn't such a red day, but it was down 1.2%. If we look at the past year, which is always my biggest focus, right? So if you're an absolute beginner, I hope that this video can bring you some reassurance of what normally happens. At the end of the day, no one can predict the future. You can read as much articles as you want, you can watch as many videos as you want, but at the end of the day, no one can actually predict the future, right? It's very simple. But what we can talk about is how the markets normally tend to trade. Patterns tend to repeat themselves. They don't always have to. This is the past year of 2021. Look, from the beginning of 2021 to where we're at right now, even before, right? This is almost the beginning of 2020. This is the NASDAQ index. And one of the things that you always notice is that ever since it recovered from COVID, the moving average, which is this light green line, is a great indicator for a potential support level. For those that always like to ask the length of my moving average, it's a length of 200. And you can see that every time that the market pulls on back, the market recovers, pulls on back, the market recovers, it pulls on back, and the market recovers. Right now, the market's pulling on back, and it makes sense that if you're just getting started, you have that concern, you have that question, like, is the market going to recover or are we going to crash? I don't know if the market's going to crash, but all I know is that based off of the past nearly 2 years, even when things get really bad, it always finds a support level. Not only does it always recover to previous highs, but it always ends up making new highs. Again, patterns tend to repeat themselves, they don't always have to. And I think that just due to that experience, because I always see that not only do the markets recover, but they always end up making new highs, I get really excited when the market pulls on back, just like we're experiencing right now. So just like I quickly talked about, TQQQ, and let me rephrase this, TQQQ is an ETF that I am deciding to buy. Just because I bought it does not mean that you should. It's triple leveraged, it decays over time, but again, looking at this for the past year, I really like the direction in the way that it trades and how consistent it is, which is why I decided to buy some, right, $44,000 worth of TQQQ, because if we recover based off of previous resistance levels, right, back up to 183, that's a 25% return from current price levels. I personally find that to be very attractive. I'm still waiting to average up into my position, which is why, again, everything that falls under tech as of right now is pulling on back, and even beyond that, right? The Dow Jones market, the S&P 500 market's pulling back, and so is the NASDAQ market. So when asking the question, what is best to do during this time? This is just my opinion, but I think because of how consistent the market is and how bullish it is, we can really utilize this time when the market is down to really begin to share and talk about what quality stocks or ETFs or whatever it is that your focus is, in that you plan to buy the dip on and then make money on as the market recovers. And this is actually why I'm making this video, right? I wanted to at least make you aware of how the market tends to trade. With that being said, I wanted to ask you a very simple question, right? So if you had one stock to buy the dip on, that's a quality company that when the market recovers, you expect that stock to recover, what would it be? I would love for you to comment down below, and I would really like to make a video with about 10 to 20, I don't know how you guys would feel about this, but about 10 to 20 stocks that meet my criteria that you guys share, and all you guys have to do is comment down below those specific stocks that you see that are bullish, that you see will recover if the market recovers, and that the ROI potential, right? The percentage potential for return that it offers is very attractive. TQQQ is one that I'm personally paying attention to. Another very popular one that I'm paying attention to is Facebook. Another one has to be Apple. But again, those are kind of like the boring blue chip stocks. I wanted to ask you, during this time, I think it's a perfect time to prepare for a recovery. And if you actually think about it based off of market performance, what you do now when the market's down is what can benefit you when the market recovers. So the actions that you take today is what can make you money or set you up to make you money in the near future, right? It's not that the market, so let me rephrase this very quickly. It's not that I expect the market to recover tomorrow or next week. That's not what I'm here to say, right? At the end of the day, like, we do not know. But all I know is that for the past nearly 2 years, the NASDAQ market has been consistently bullish, and it's had very aggressive, red days and red weeks. It pulls on back, it pulls on back, it pulls on back, it pulls on back. It's pulling back right now. This is not out of character for the overall market. But I want to remind you, for those that are just beginners, it's what you do now and the stocks you choose to buy now at current price levels that are not to make you money tomorrow or next week, but when the market does recover, and whenever it is that that does happen because of overall market direction, what you do now will make you money in the up and coming future, which I think is, again, super exciting. So yes, you can be very hard on yourself and you can be down on yourself because of your red day or your red week. At least for those that are investing and trading quality stocks, you need to remind yourself about your intention. You're buying now to profit later. It's not about you needing to make the most money right now. AMC was a trade that I chose to take. I'm up a little bit over $1,500. That's more of a day trade or a short-term swing trade, right? Not really what I'm talking about. But when it comes down to TQQQ, when it comes down to something like even like Tesla, right? Tesla is also down as of right now. I view it to be somewhat a little bit more on the cheaper side. That's my opinion, which is why I decided to buy somewhat of the dip. So with that being said, again, it's the actions that we take now that can benefit our future self. Make sure that if you guys would like me to feature your top stock in my next video, you comment that down below. So I'm very excited to actually make that video. If you guys would like me to make that video, please make sure you drop a thumbs up, subscribe to the channel, turn on your post notifications, and make sure that if you guys are, just as absolute beginners, if you guys are really struggling to understand the overall concept of trading in the stock market and you want to work with us on a closer basis, take 2 minutes, click the first link in the description, and learn a little bit more on how you can watch me trade live as soon as tomorrow. I appreciate you guys' time. Like always, let's make sure that we end the year on a green note. Take it easy, team.